I'm hoping out in East Africa the sun is shining, but the sun is not shining on the stock exchange. If we can begin there initially, we've seen that market coming under pressure, and yesterday a 1% drop. There's no good news in this market at all.
Yeah, certainly, and it's not looking like it's going to recover, substantially anytime soon. Earnings have been coming up quite strongly. KCB, Equity Bank, Kenol Kobil. But with all these results, we're still seeing very muted performance on the stocks. And it doesn't appear that there's going to be a strong recovery going forward.
Yeah. Now, of course, one of the key problems is the shilling that we have seen coming under pressure since that surprise decision by the central bank not to increase rates when most of the market was expecting an increase. Though we must say there are some who thought there would be no increase. In your view, how big a drag is the shilling right now on equities?
I think on the part of foreign investors, the decision would be, if you invest now, would you take a hit on the foreign exchange, and would you be able to recover that if the stocks sort of start recovering? Because the valuations are starting to look attractive. I think that's the key uncertainty. But I think looking at it from the Kenyan economy point of view, and maybe from the monetary policy committee point of view, they realized that raising interest rates, would not really solve the inflation problem, and really the rest is more fiscal policy and try to solve the food problem at this time. And if they raise interest rates too much, then that's going to hurt growth. So I think on overall they had to try and strike a balance, and I think that's what they're trying to do.
Yeah, but I suppose any time you've got negative real interest rates of around 9 percentage points, you have to worry if you're a central bank, especially if you want to maintain your credentials as an institution that fights inflation. I mean, if we look at this Kenyan market, down 1%, as I said yesterday, over the week we're down 0.6%, and over the past 1 month, that market is down 5.2%, but over the year, down 15%. So surely there must be more pockets of value showing than perhaps the indices are showing us.
Well, I guess if you're starting to look at the inflation figure, you have to strip out the food aspect, because that's sort of temporary and sort of fluctuates quite a bit. And after that, you're sort of looking at inflation at around 6 to 7%. I think with that, we still have some room to go on raising interest rates. But I think they've just sort of held it, maybe the next decision they probably have to hike it.
Yeah, let's look at the market performance yesterday. Some of the shares that came under pressure included KCB, surprisingly, after those results that appeared to be very good on the surface of it. Maybe you can give us your thoughts on that. But unsurprisingly, we also had Kenya Power coming under pressure yesterday, down 1.8%.
It's surprising, actually. Those two are some of our favorite counters in this market. KCB in the sector, along with Equity Bank. Equity Bank also posted very strong earnings. On a price to book, KCB remains quite attractive. Kenya Power, in the utilities sector, that remains our pick. From a capex perspective, I mean, apart from the problems that it's been having of late with regards to just fighting in terms of the PR perspective, because they are having to do some load shedding. But otherwise, from a performance point of view, to the period ending June, they should post pretty solid earnings. Yeah,
but is this a share to be selling now?
No, I don't think so. I think if you're looking at Kenya Power, it's probably a victim of its own success. The demand for power in this country has been rising quite significantly, almost double-digit, almost every other year. And even with the capacity that is being put in place, I think the demand itself is really outstripping the capacity. But let's not forget, Kenya Power is really just a distributor. The generators, you have Kenyan, you have the independent power producers. And the government is putting a lot of effort towards that. So, even though Kenya Power is taking the slack for sort of, the load shedding program, for them, it's not really their problem. For them, it's to ensure the system remains efficient and they're able to distribute power.
Yeah.
They've improved their system, and so I think going forward, it remains an attractive stock.
Yeah. Now, we also saw the World Bank yesterday announcing a $500 million support for Kenya for the drought situation. Do you reckon stocks could find some cheer in that, and perhaps the shilling as well? Because this is fresh money that's coming into the market.
Yeah. Actually, that's a very significant amount if you think about it. And we start looking at other situations. If you look at Japan when you started having such inflows, just on the recovery point of view, they do tend to support the currency. I think at the moment we shouldn't read too much into that, but obviously it should hold the currency relatively stable. But from a demand point of view, I think it's important to look at where the demand for the US dollar is coming, from a Kenyan perspective. You have very strong demand coming in from the industrials, from oil, a lot of capacity being developed locally. And that has really weighed up on the currency, as well as just demand from the general population, rising middle income.
Yeah.
And I think also the central bank with a weaker currency will be able to tame a bit of that demand.
Yeah, but of course the central bank hasn't helped the situation, because we've seen it coming into the market to buy some dollars and euros at a time when the market was under pressure. Most of the analysts that we've been speaking to are talking about the Kenyan shilling weakening to new record lows against the US dollar. What's your view? Where do you see it going from here on?
I think it might be a bit challenging, but I think if we gravitate towards 95, maybe 100, it might not be necessarily bad over the longer term. It will generally make our economy competitive. And then if you try and look at the position that the central bank is in, they have about 3.9 months import cover. Yeah. The convergence criteria under the East African community is about 6 months import cover. So just from that perspective, they have to build up their reserves to 6 months. And then they have to balance. They don't want to raise interest rates too much, otherwise that's going to hurt growth.
Sure.
And so they have to let one thing balance and stick with one metric. And I think they've opted to just stick with the interest rate and let the currency find its own level.
Yeah. Now, Eric, quickly, what's your forecast rate for the shilling next week?
I think it's probably going to remain around the same level, maybe touch 91.